What's up, YouTubers? Ken here from the Dyslexic Investor, and we are looking at some fantastic charts today. This is Tuesday. What is it? October 22nd. I should look on the bottom of the screen here. Almost 1 o'clock here. This is on the East Coast. Great day of trading. We are nearly at all-time highs in the S&P 500. So let's just gonna go to SPY to make things slightly simpler here. You can kind of see here all-time highs are at 302.63. We are currently at we hit a little almost 301. So we're within like 1 point. So that's pretty significant, and we've had a lot of push-up through and through each given day and staying really high in the momentum side. So we're going to look at this little indicator right here. Yes, here we go. So these are my Keltner channels, and these are Bollinger Bands right here. Normally, I got this new tool here, so we're gonna do this fun stuff here. We're gonna do this right here. Look at that spot right there. See that big red dot? That is I'm gonna highlight even for you too. So this right here is very important, this little red line. So it's breaking out of the Keltner channel. And normally, if it breaks out and then touches the Bollinger Band, as you can see here, let me go zoom out some more. Oops. Trash. Let's go here. Let's go a little bit more longer time frame. Do that highlight in here again. And we're gonna go here, almost here. Oh my gosh, here and right here and over here, and then so forth along the past. So that being said, those points after it hits that lovely little marker there, it usually has a kickback. It's just like, ooh, it's an electronic fence. Like, that hurt. It needs to slow down, and Mr. Market or Mrs. Market tries to rein it back in. Of like, hey, hold up. You've got a little bit too far ahead of yourself. Let's bring it down a notch, okay? Sit back, relax, consolidate, and maybe push higher. Sometimes lower. You can see here a lot of things usually go back to this lovely little dotted line, which is the, if I can highlight it, it's like the 21, it's basically equivalent to like the 21 exponential moving average, which you know that I adore a lot of just being like a reversion to the mean. So that being said, I definitely can see it go higher. I can definitely see it touching and breaking out, but as soon as it breaks out, we're going to get a little bit of a pullback. I believe this to be very true. So looking at some companies that literally just hit new 52-week highs, we got your boy Bank of America over here. Let's go look at a nice sexy chart of Bank of America here. Look at that, $31, breaking out from the lovely $27, $26 to $30 range that it's been stuck in for nearly a year. More than a year, actually. Let's go on a weekly chart on this son of a gun. Here, yeah, look at that. It's literally been trading for the last like 2 years in between below 30 and above like 25. Well, again, yes, I know I can see that this went down lower, but that was due to a large overall sell-off. Its trading range has been somewhat stagnant. Nice little breakout here. I like that. That's really good. I'm not going to read any more into it. It's 52-week high. We'll see what happens. Bristol Myers, as Jim Cramer would say. Let me just get rid of these 10,000 flipping lines I got on here. All right, so let's go to a daily chart. I'm guessing they had earnings or something today or something. Or upcoming earnings or something happened here. Because that's a hell of a gap up. Yeah, this is, you can definitely see it's coming off because it crossed above the RSI normal range, and normally this is like the Keltner channel. I bet you if I go over here, yeah, this puppy needs to be reined in some. That's a heck of a move. It's going to consolidate, most likely level out, let those channels move on the way up, and kind of consolidate. But that's that's a heck of a move there. And then our good friend Apple. Look at that beautiful chart. Look at that thing. All new highs. That's fantastic. Is there a tariff stuff going on in China? Because Apple doesn't give a rat's ass, because they're just killing it here at 241 here. Whew. Breaking up. Here we go. Let's go look at the weekly. Yeah, this is fantastic. So this, yeah, wow. This is when when people are like, oh no, the iPhone, they're not selling many iPhones. Oh, who cares? 200. Commenting on the weekly chart, bringing that bitch higher. Look at that. Nice little follow through. Got a little of a dip here. We call this in the trading room the A, B, C, D pattern. A goes down. B consolidates. C goes up to about the 50-ish point percentile, or 50% of this range. Consolidates some more, comes down, does not go past this line here, and then boom, bang, Bob's your uncle. It goes higher from that point forward. And that's a very simplistic, extremely simplistic breakdown on what happened there in Apple. It does not care about any trade wars right now with China and tariff stuff. So don't forget to like and subscribe down below. If you have any questions, comments, concerns, please leave it in the comments. Open to any kind of questions, criticism, feedback, whatever. Bring it your way. Again, this is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace.